Welcome back, guys. This is the Stock Estate, your financial bro here, and today this video is gonna be for my fellow swing traders and my traders out there, not really for my long-term investors. Okay, and the stock I'm going to talk about today is HCAC, which is Canoe. Okay, so if you don't know what Canoe is, okay, it is an EV company that's going to be merging with a special purpose acquisition company called a SPAC. Okay, without further ado, let's go through the table of contents for today. Okay, so firstly, I'll talk about what Canoe is, what its business model is, and how does it compare, to the other EV companies, and how is it unique from other EV companies such as Workhorse, Ride, Tesla, etc. And the second point I'm going to be talking about is more of the institutional buying. I'm going to be talking a little bit more about that. Thirdly, I talk about its management-wise, its leaders, what are the credibility of the leaders itself, and lastly, I'll wrap it all up, and sum it up. How am I going to actually trade this? Okay, what's my plan? What's my exit strategy? When I'm going to enter the markets? And I'm going to do a little bit of technical analysis for you as well. So for the new subscribers, right, welcome, type down in the comment section to, to tell me what kind of video that you wish to see. And for my new viewers, subscribe, join the family, join the investors, we are people who plan out our trades, plan out our things, for long-term investment wise, we plan out when do we want to average our costs down, etc, etc. And to everyone, thank you very much because thank you for watching the video, and a like button would really help out this new channel and encourage me to put out more content for you. Alright, and cue intro. Welcome back to the channel, folks. This is Stock Estate here, an ex-financial advisor here to bring you great content here on YouTube. Okay, so let's jump straight into it. Okay, so HCAC, okay, Canoe. Okay, Canoe has been downtrending, since the merger announcement news. So it's been downtrending, especially after, the supposed SPAC bubble burst. It's been going down all the way down to the lows of $10.24. And recently, it's just been exploding up and down. Okay, insane, explosion. Okay, crazy explosion. Okay, and it's now trading currently at the $13 range. Okay, why am I choosing this stock itself? Okay, it's because I feel like this has much more room to run in comparison to other SPACs that has already been running up massively, like CIIC, and as well as LCA and many other SPACs. Okay, and if I do remember correctly, after the merger itself, the merger date itself is on 18 December, so we have around 2 weeks more to run, and I do believe it has a potential to go up to around $20, okay, at least around there. Or maybe it hits a downturn around $17 or $18 might be a possibility as well. So you can see that at $13.46, that's another $4 pop per share, okay, which is a very significant amount. Okay, and let's go back to, explaining a little bit more about what is Canoe, what its business model is. Okay, so Canoe, right? Canoe is an EV company, and it's merging with a SPAC. That's all you need to know. I'm just playing you. Okay, I'm just playing you. Okay, so Canoe itself, right? It's a little bit different from all the other businesses that are connecting the EV business. Is basically because the company itself, okay, the Canoe Canvas series, okay, it highlights the company's unique wrapping strategy and the range of possibilities through customized vinyl wraps that will be designed to be easily removed or replaced. Okay, so a lot of people know that Canoe is an EV company, but they don't really know what it is actually about. Okay, so basically, right, okay, if you look at this card itself, okay, it actually takes it only makes the bottom as the base. Okay, the bottom is the only thing that it's actually making. Okay, then after that, right, the outer layer, okay, it's like a Lego. Okay, it's like a Lego. Okay, you can remove the top layer, okay, and replace it with something else. Okay, so you can just remove it, place it something else. Okay, you don't like this design, okay, remove it, place something else back on this. Okay, and the thing about its business model is a little bit interesting, and it has a nice little twist itself because it is a subscription-based model. Okay, so Canoe doesn't want to sell you a car, it wants you to subscribe to one. And the company plans to maintain, repair, and even recondition its EVs, okay, with the goal to form a community, like Tesla, referral, perks. Okay, so what does this mean? Okay, Canoe it's not even selling you the car itself. Okay, it's selling you a subscription. So you're subscribing to one car, then you are able to change, maintain, and even recondition the EVs itself. So it reminds me a little bit of Neo with its battery as a service, okay, which is also a subscription based model. Okay, and this kind is the interesting thing about this is it's not like a one time kind of revenue. So you sell the car and you're done. Okay, it's a very sticky revenue. So it continues to they continue to, as long as they sell one subscription, they'll continue to generate recurring revenue time after time. Okay, and I feel like the design itself is also pretty interesting itself like this. Okay, so we'll just take a closer look at it. Okay, okay, take a look at this video, right? Okay, let's look at this. Okay, move forward a little bit more. Okay, you can see that the car is pretty squarish. Okay, the inside is, yeah. So apparently all of these, you can remove the outer part pretty easily. Okay, it's pretty squarish looking. Okay, you see it's pretty interesting. Okay, it's quite different looking from all the other traditional car companies. Yeah, so and that's basically the very quick rundown of what HCAC is. So you know what you're buying into and what you're trading this stock. Okay, so yeah, maybe for some of the traders they're like, I don't really care about all this. Okay, but this is for the people there who really wants to know a little bit more about what they're actually buying. Okay, so that's cool. Okay, so now roughly the business model and what roughly it is done. Okay, so we're going to talk about a little bit more about institutional buying. Okay, so from this article itself, okay, we see that the institutions actually own 62% of HCAC. Okay, institutions own 62% of HCAC. Okay, when institutions starts heavily buying into a company, okay, that means they do realize that this company has a very excellent long-term prospect, and that's why they are buying into it. Okay, they must have seen something. Okay, and with heavy institutions setting the base, right? Okay, it has so much more room to run even further with adding in the retail investor hype that we have been seeing with all the SPACs. Okay, and that's why which I'll elaborate later on. Why we must tread this pretty damn carefully, because anything can go wrong at any point of time. Okay, good. So institutions wise, yes. Okay, a lot of people are buying into this, so there must be something really fueling this hype behind HCAC. Okay, so last one, we talk about management itself. I'm pretty impressed with its management. Okay, so you look at the management, right? Okay, so the CEO of Canoe was a former BMW executive. 30 years with BMW and Mini. Wow, insane. Okay, and the founder of it, is also CEO of. There's one of the directors is also the founder and CEO of AVB Partners, and many of the board of directors. They have many experience in many areas. Okay, and it's also been backed up, not really backed up I would say, but even Kramer, the infamous Kramer, have actually supported, and he says that he thinks that Canoe has great management. Okay, and he way before, back in I think it was, not wrong, don't fact check me on this, but I think it was April, he even kind of called out and said that HCAC at that price point then, right, like around $11, $12, it's a buy. Okay, it's a buy. Okay, so even Kramer at about that point in time was very against SPACs, was very for it. So yeah, this is a pretty bullish point as well. Okay, so now let's talk about what's my plan. Okay, so what's my take on it? So I'm going to tell you how am I going to do this. Okay, so before that, disclaimer. Okay, this is my take on it. Okay, always do your own analysis and craft your own exit plan. Okay, because the amount that we all put in, the amount of risk that we all are taking are different. And, it's not about how much, you are able to make. Okay? It's about how much you can keep. So for each of one of you, right, some of you might not be able to sleep well, holding stocks through the next day, thinking that, there's a potential chance of 30% loss. So if you can't stomach a 20% loss, right, overnight, then you really have to position size it a little bit better. Okay, so one point about this is, people are getting pretty iffy about SPACs. Okay, the way that these SPACs trade, a lot of people kind of know. Okay, is buy the rumor, sell the news. Okay, we buy, almost at the merger date, everybody just dumps it. Okay, so for my own personal analogy is, if you can't be smarter, be first. Okay, so if you can't be you're not smart, and I don't think I'm smart as well. Okay, so if I'm not able to time exactly when to get out, right? So the only thing I can do is to be first. Okay, so instead of trying to stretch out, get the maximized profits, and hold it up through the day before the merger, and then you sell, right? I would actually take profits early, because with everybody being so iffy, right? Okay, people are getting smarter and smarter, and they'll try to take profits beforehand. And once the selling starts, the price action starts getting big, and the price action starts getting big, right? And people start selling as referencing to this area over here. Okay, once it starts to sell off, it's going to be super fast. Okay, it's going to be red day after red day after red day after red day, because everybody start panic dumping because there's a lot of people just buying to this hype, and everybody just dumps. Okay, so it's very, very dangerous. Okay, super dangerous. So you need to be very, very aware of this. Okay, so you need to be earlier, be smarter. Okay, so what's my exit plan? My strategy is to enter on Monday, 7th December, which is the next day from the video is released. I hope so. Okay, and I exit 1 week later on the Monday itself. Okay, so the merger date is the Monday after. Okay, but I'm exiting way earlier beforehand. Okay, because I do not want to take additional risk. For me, it's a lot of risk management because, for me as a trader, I also like to. For me, I'm more conservative. I would say I don't like to go all Wall Street bets mode on this. So I would actually be first. I take lesser profits. I'm fine with that. Okay, and it's always better to take profits with a clearer head, than to painfully sell something because you have overextended yourself. Okay, good. So this next point is this is super high risk, because as you look at the price action itself from technical analysis point of view, right? The way that this has actually rallied, okay, big blocks, big chunks like this, okay, just shoots up 10%, 20%, 10%, 20%. Okay, high chance of reversing the same way because there's nothing to fall back on. Okay, normally if you see there's consolidation around here, right, this area, see the $10 range, consolidate. If anything happens, this is a very solid line to fall back into. But you see this huge gap over here. If this starts, there's a price action here starts getting big, right? The next bottom you'll find is 11 already. So that's a $2 drop. That's at least a 20% drop from here to here. Okay, easy. Okay, and there's no support or anything over here to try to support this price action from going this deep. So it's very dangerous. Okay, very, very dangerous. Okay, so but again, it's a high risk, high reward play. Okay, for me, it's okay. Now, next tip I can give is to take profits on every pop if you put in a huge amount. So, for example, if you put in $10,000, right? Okay, on Monday. Okay, I put in $10,000 on Monday. Then Tuesday it pops 20%. Okay, 20%. Anything that's 20% or more is a massive pop. It's 20% pop. I'll take half profits. Yes, because 10% is 10k is a lot, so I'll take half profits. Then if next Tuesday it pops 1, 2, 3, 4%, like a very tiny amount, okay, then I'll take lesser. I'll take maybe 10% of my profits or 20% of my profits. So I'll just keep slowly taking profits until Friday. Then I'll just exit everything. Monday, and I'll exit everything. Or if you want to be even more conservative, Friday will actually be a better choice. So that's how I'm going to play it. Okay, and this is the plan B, okay? Let me type it out here. Plan B, okay? So plan B is to be ruthless in cutting losses. So worst case scenario, Monday we buy in, things go to shit, okay? Can happen, okay? Can happen. The moment you bought in, start having a red day. Okay, it starts going to -5%. Once it hits over -5%, cut your losses, okay? Just get out, because it's very dangerous. Okay, there's a high chance, very, very high chance. I'm not saying it would. Okay, it could just 5% and reverse back again, but there's a very, very high chance on a technical standpoint of view. Very high chance you just all the way back here to 11. So if you cut your loss around here at around 12, 5% loss, right, around here, then if it falls back down here, you can just rebuy it again to ride the trend back up, because there's still time for the merger. Okay, but that's why you gotta play smart about this. So you must be really, really ruthless, okay, deliciously ruthless in cutting losses. Okay, so this was the point which I covered already. Watch the price action really, really closely, and react to any weakening of the trend. Because see any weakness, okay, just cut the loss. Okay, we do not want to suffer 50% loss or suffer huge loss because of this like sense of greed or sense of hoping, okay, that things would go our way. Okay, the market is very fair. Okay, we don't want to be beggars, like, oh, please market, give me some gains, give me some gains. Okay, if really things go to shit, cut your loss, find a better opportunity, get back those gains. Okay, and all of this again, I'm saying this as a trader, point of view from a trader. Okay, very different if you're investing in this. Okay, good. So this video is not really for my traders, okay, it's my long-term investors, and I really, really hope you guys make some money. Alright. Thank you very much for watching this video. Again, subscribe if you haven't already. Click the like button. Drop down in my comments below. Okay, how much will you be putting into HCAC on Monday? Or will you be putting any at all? Tell me in the comments below. Thank you very much, and I shall see you in the next video. Stock and stay up.